Welcome to this new video. We're going to be diving into what is the profit first system? Should it be used for your business? And who does it make sense for? So the first thing is Profit First was a book written by an entrepreneur named Mike Michalowicz. If you're interested, I'll put a link to the book below. You can go buy from Amazon or anywhere else that you want to buy a book. It's been tremendously helpful for our business, especially up to when we were making $150,000, $200,000 a month. Was super, super powerful. Still something that we put in place. And I want to break down just a little bit of a review of the Profit First system in case you're wondering, what does it mean and why did he create this system? And I should just state that this is just my interpretation of it. The book goes into a lot more depth on a lot of things. There are other principles included in the book, but I want to talk about the big one, which is sort of setting up this accounting system to allow you to have better habits when it comes to your finances. So before we go in, we're going to dive in. Just the book is called Profit First. This is Profit First System. Mike Michalowicz is the author. We always want to give credit to where credit is due. But if you've been following us for a while, here over at CEO Finance Academy, if I can get this to move, I'm using this tool called Miro. If you're interested in using like this cool sort of grid framework, it's really cool. So that we have three pillars: earn, keep, grow. Earn is all about how do you raise your income. Keep is about how do you keep your income and more of it, which is the primary focus of what we do in CEO Finance Academy. And this is where Profit First fits into, which is a system for being better at keeping your money. And then, the third pillar of our wealth framework is how do you grow your money through investments and making your money work for you. So we're diving into Profit First. Profit First fits into our keep area here in the framework of what we do as a company here. We primarily focus on adding in discipline, accountability, and strategy and structure. One of those strategies is potentially implementing the Profit First system into your business. So let's dive in over here. One of the first things, and I was actually watching this from a talk with Mike that he had put on YouTube, if I can get this to move, is that the old way of thinking about profit is revenue minus expenses equals profit. And if you look at a classic P&L sheet, that's pretty true, which is, hey, what did you make income-wise? What are all the sources of revenue? How much total revenue came in minus all of your expenses? That equals the profit that's left over. Well, it doesn't really help us understand, can we grow our business? And what do we really have left after we pay ourselves, save for taxes, and essentially pay our employees and things like that? And so what Mike argues in the book, and this is my interpretation, is that we should really be looking at it differently, that revenue minus profit equals expenses. And what should this profit include, and why would we have expenses over here? Well, profit meaning that revenue minus whatever I pay myself, what I save for taxes, what I save for growth, and what's left over, that's the amount of expenses I can definitely cover in my business. So it's a unique way of looking at it. You might say, well, what if I need to raise my expenses? Well, then you would play with variables here, like maybe I reduce my take-home pay a little bit, or maybe maybe instead of saving 25% for taxes aggressively, I'm going to save 22% to save, so I can have more in my expenses for next month. Or more importantly, if you're putting in for business reserves, that Mike's going to talk about, or we'll talk about here how he does this, that your expenses relatively stay the same because you're going to pull from different areas of here. And the reason this is important is because we don't want to change what your take-home pay is. And it's the biggest problem we see with a lot of solopreneurs, early business owners, people with a small staff, is that they just don't pay themselves consistently. They change how much they're paying themselves often, and they essentially default to whatever the business needs will do versus, no, I pay myself consistently in a salary, and this is what I pay myself. So let's look into this from a structure standpoint. So how do we implement this into a business? Well, old school style of thinking, and this might be you, and we see this in a lot of business owners that come to us, is that they just have a checking account, and maybe they have a credit card over here, maybe they have a checking and a savings account, but they just have one account where everything's run through. They pay themselves out of this account. All their expenses are run out of this account. Any payroll that they do comes out of the same account. It's all from a checking account or maybe a credit card. And the problem with that is it becomes really difficult to know, how are we bucketing this money? You have to be super disciplined. It's not that you can't do it. What Profit First argues, in my interpretation, is that our tendency is to have the habit to not look at things consistently and default to our natural tendency, which for a lot of us is to be spenders. And if you're an entrepreneur, you're probably a go-getter and you're like, look, whatever it takes, let's do it. And you're not really like dividing your money the way it should be, in a strategic manner, in a disciplined manner that allows you to predictably grow. So rather than doing one checking account or one checking and one savings account that are just generic accounts, and by generic, I just mean titled generically checking and savings. And in your savings, maybe it's, well, I save for taxes, but it's also, that's where my reserves are. That's where my expenses, extra expenses stay. What Mike argues is that you should have at least 4 accounts. In his businesses, he talks about how they just add an account whenever they need to. So you're literally going to you would call your bank under your business account, your business, wherever you have your business banking at. You'd go and say, I want to set up 4 checking accounts. And one is going to be labeled owner's compensation. The other is going to be taxes. The other is going to be operating expenses. And the other is going to be profit, what's left over. So every single month that you get money come into your checking account. So let's say at the end of the month, you get money coming in from different sources. I just say you're getting like, you have multiple products and services, you're selling them, they're all coming into this checking account. Well, rather than just saying, great, I have all this money in my checking account, I have expenses, it all comes out of this account. If you know that you have roughly $3,000 of expenses per month, every single month, you're going to put that money in. As soon as this money comes in, it goes into operating expenses. 3K is moved over here. And now all of your expenses, all like any expenses that you run under the business now come through this checking account. Meaning you're going to go to your different softwares that you use, payroll, whatever, that all moves over to your operating expenses. And you're going to go into those places where you have your card, and you're going to change it over to this account. And so all your expenses are just pulled from here. And you never have to wonder, well, when's the next thing going to come out of here? It's coming out of your operating expenses. Same thing here. That, hey, you want to be saving, I don't know, let's just say you're a solopreneur and you're running an LLC. You want to save 30% on taxes. At the end of the month, whatever you got, 30%, boom, right in for taxes. Like 30% right off the top goes into taxes. And you don't have to move it to a general savings. It's in your tax account. Same thing here. That every month you want to pay yourself $5,000 a month. That gets pulled immediately right out of here, the checking, into your owner's comp. And now you run payroll to yourself through this account, not through checking. So you don't have to worry, well, when's it going to hit? Is that $5,000 going to come out of here next month? What is that? And I don't know how many other expenses are coming out. Now you're able to know. And then whatever is left over, you move back over to profit. And the whole part of this is that this checking account at the end of the month goes back to zero. And how is it able to go back to zero? Now, maybe you want to leave a minimum so you don't get like a whatever $50 fine in your checking account, but you get the idea. It resets to basically nothing. And why that is because you're pulling all of your expenses from here. You're paying yourself from here. You're saving your taxes here, and anything left over goes into the profit account. So every month, your normal checking account, your income account is going back to zero. We've been using this for a long time in our business. We have 5 accounts for our business. We actually have 6 because technically there's 2 of us that run the business. So this owner's comp is divided into 2. We have taxes, we have operating expenses, we have profit, and then we have business reserves. So we have over here business reserves, and we keep essentially 3 months extra of operating expenses in our business reserves account. So that's how we set this up. That's how we continue to use it for our business. We have a little bit different of a business entity structure, but I wanted to show you this is the way of thinking. And so if you're somebody who is struggling with discipline, if you're finding out that you are having a hard time, if you're waking up and like huge chunks are gone in your checking account and you don't know, like, well, maybe I can't pay myself this much this month, or, oh my gosh, am I going to be able to pay my expenses? Or, hey, I have no clue if I have enough for taxes. Setting up these separate accounts, 4 separate checking accounts inside of your business banking, wherever you go, whether it's Chase, Wells Fargo, whatever, right? You're going to call them. Typically, you have to call them to set them up. Some banks may be able to do this online. And now you're going to start making decisions based off of, wow, I don't have enough to pay my expenses. Okay, well, what do I have to do? You need to go make more sales, right? So it starts telling you, I need to go make more sales. I don't have profit ever. Okay, well, we either need to look at what are our expenses right? Like maybe our operating expenses are too high. Can we cut down there? We can't really adjust for taxes, and we certainly don't want to compromise on our owner's comp. So expenses or driving more revenue are the two methods that we would look at. So I hope this helps. This is kind of my interpretation overview of the profit first system. Again, like I said, the book goes into way more in depth about other aspects of your behavior and tracking and finances. But I get a lot of questions on why do people talk about this book, Profit First? Why do people use it? It's really about disciplined behavior and making sure that you're organizing your finances just the same way that you would organize the paperwork in your life, the way that you would organize your kitchen. It's so everything has its place and you don't have to wonder. Imagine if all of your silverware, dishes, pots and pans were just in one drawer in a cupboard and it's just all scattered. You might have to spend 10 minutes scrounging for a fork. When if you just originally, when they got out of the dishwasher, just put them each in their own place, you'd know where the forks are and you could get them really easily. And having that discipline just saves so much mental space and allows you to make better decisions and make a better use of your time. So I hope this helps. If you're interested in more of like how to use stuff like Profit First, get your business finances in order, we have a free business finance course. If you go to www.ceofinanceacademy.com/free, you can get access to our free course where we cover a lot of this stuff more in depth. It's really, I think, $1,000 minimum course that we were just giving away for free to help business owners level up their finances. So hope this helps. Definitely check out the book, give it a read, and let us know what you think in the comments. If you're currently using Profit First, if you don't use Profit First, why not? And let us know in the comments, and would love to hear from you guys.